Hello everybody and welcome to week 8 newsreel. Bogdan here, your disappointed host for the next couple of minutes. And when I say disappointed, I'm referring of course to the Dark Ages events from Ukraine. I'm not going to cover more about this subject. My thoughts are towards the honest and peaceful people of Ukraine and the Russian Federation. Stay strong and let's hope that the Tsar's medication will kick in soon in order to send him to the loony bin. That's what I think about what is happening these hours in Ukraine. And because I'm thinking about Ukraine, guys, this week I'm not going to give you a quiz, but rather tell you that in 2020, Ukraine was the largest exporter of corn in Europe, more than France, Romania, Hungary, and Serbia combined. And we're talking here about 30 million tons of corn that Ukraine exported in 2020. And for your reference, in the same year, Russia exported only a tenth of that volume. Without a doubt, this war will surely magnify the current global trade crisis with immediate ripple effects on the oil and energy sectors, but also in the metal and cereal ones, as both Ukraine and the Russian Federation are important players in all these sectors. As for the container trade in the Black Sea, well, from what I saw, most of the shipping lines have stopped to take bookings to and from Ukraine, and basically everybody is on hold waiting for new developments. And speaking of container trade, the Freightos index for week 8 set at $9,789, which is almost 1% up from the previous week, with big movers concerning the sub-index connecting China to North America West Coast was up 2%, and the sub-index connecting Europe to South America East Coast was down 8%. As for the main sub-indexes here, for the Trans-Pacific head hauls, we have the following values. $15,898 for the one connecting China to North America West Coast, and $18,020 for the one connecting China to North America East Coast. For the crossways ones, China to North Europe is down 1%, so we have $14,225 in absolute terms, while the one connecting China to the Mediterranean is up 1% to $13,977. So quite stable, the general index, and for the time being, also the ones for the crossways. But I will expect that for week 9, the index will be a little bit more volatile, especially for the crossways ones. And guys, although I am not covering a lot the new Silk Road freights or its developments, I think that this also will be affected in the short term, especially if companies from Western Europe will try to boycott Russia's actions by choosing not to move their containers through the new Silk Road. And of course, this is also a message towards China, who will have to pay close attention to its interests. And now moving away from this subject, the first news comes from supplychaindive.com, and it's related to the Department of Justice initiative in partnership with the FBI to identify and prosecute companies that exploit supply chain disruptions for profit. According to this article, the DOJ also formed a working group with countries like the United Kingdom, Canada, Australia, and New Zealand in order to share intelligence for detecting global collusion schemes. But here, of course, no word about the European Union Competition Authority, who is still hibernating, I think, comfortably in their den out there in Brussels. Here, it seems that Amazon already suspended almost 4,000 accounts in the United States for violating its fair pricing policies, and said it has partnered directly with law enforcement agencies to combat price gougers, especially on products related to COVID-19, such as masks and hand sanitizers. My thought here, guys, well, I bet that two-thirds of those 4,000 Amazon accounts that were blocked in the United States are Chinese-related entities who opened an office in the United States for a quick profit. That's that. Nothing more, nothing less, and rest assured that I will follow up on this story as soon as I have new info available. Now, changing registers, guys. My next news comes from the Seattle headquartered logistics and freight forwarding company Epeditors, who on February 20th informed their clients that a target cyber attack compromised their operations related to freight, customs, and distribution. And until now, there are no estimations of when operations will resume at full capacity. And according to their latest update, which was yesterday, Epeditors are currently operating within their global business continuity plan. And frankly, I wouldn't want to be in the shoes of the IT guys, and I really hope that they will resume their activity at 100% as soon as possible. Again, good luck with solving the issue. And now I'll move on to my next news coming from OECD newsroom. And we have here a nice chart about the trends in the fourth quarter of 2021. And I will be very brief here. You have the link in the description below this video if you want to deep dive. So basically for the G20 countries, international trade accelerated in value terms in the fourth quarter of 2021, partially due to high commodity prices, energy in particular. Breaking down the Q4 results, for the United States, the exports were up 7.1%. Canada's exports grew with 6.7%, sorry, while Mexico's exports were up 6%. For South America, both Argentina and Brazil, the biggest exporters, had a contraction of 7.3 and 5% respectively, with lower shipments of metal ores and soybeans, mostly towards China, of course, having a big weight on the Brazilian figures, according to this report. On the other side of the Atlantic, in Europe, the trade picked up in the fourth quarter, and both the imports and exports in the European Union expanded by 5.1 and 2.3% respectively, with France, Germany, and Italy leading the way. For Asia, as expected, for South Korea, electronics and vehicles continued to drive the exports with a 5.2 increase. For Japan, the growth was moderate, only 0.5%. For China, the exports were up almost 5%, while the imports were up 0.9%. As for the leading exporters of primary commodities, these two benefited from the high demand and the steep price increase in 2021. And we have the following annual figures. Russian exports soared some 47.5%. India also was up 42%. Indonesia again up 38%. And again, good figures were also for South Africa's exports, who saw its exports increase with almost 45%. And even though these figures, as I've said previously, are related to the fourth quarter of 2021, or I don't know, are comparing the cumulative results of 2021 to those of 2020, it seems that the trading activities, at least in terms of value, are beginning to bounce back to pre-pandemic ones. So let's hope that the momentum will be kept and this trend will continue, hoping of course that black swan events are not becoming a rule rather than an exception. And guys, with this report being covered, I'll now move on to my last news, so bear with me, which is coming from the EU Commission, and it's about the extended anti-dumping and countervailing measures that the EU imposed on imports of glass fiber fabrics originating in China and those consigned from Morocco. And here, long story short, guys, the latest findings are as follows. We have TechFab Europe, which is an association of EU producers of glass fiber fabrics, who requested the European Union Commission on May 19th, 2021 to investigate the change in the pattern of trade involving exports from China, Egypt, and Morocco to the European Union, as they were suspecting that the anti-dumping duties that were already imposed by the Chinese originating glass fiber fabrics were circumvented by imports consigned from Morocco. So basically we have PGTex China, who opened a facility in Morocco, which is called, of course, PGTex Morocco, who supposedly they did some kind of assembly or value-added activities in order to fulfill the requirements of originating from Morocco. But it seems that this scheme was a trick only to escape the anti-dumping duties, and now they are targeted with a 69% anti-dumping duty. And by all means, guys, don't think even for a second that this product was sold randomly in the European Union. We have here a wind blade manufacturer called LM Wind Power, which is now part of General Electric, who argued that the initiation of the investigation was not justified due to a lack of sufficient evidence, and that the investigation should therefore be immediately terminated. Well, guess what, guys? The investigation was not terminated. In fact, it confirmed the suspicion of TechFab. And if you ask me, although it is not mentioned here, I suppose that LM Wind Power was PGTech's biggest customer, and now they will have to reconsider their entire sourcing strategy and their pricing mechanism. So there you are, guys, another detective story, if you want, with China having the lead role. And it seems that these stories are getting more and more frequent, and let's face it, we're talking here about China, so subsidies and anti-dumping duties being circumvented is part of their arsenal, right? So this was the last story that I wanted to cover. My time is up. Thank you all for watching. I really hope that you've enjoyed. Don't forget to hit the like and the subscribe buttons. And of course, until next time, keep your business safe. Thanks.